Morning, everybody. It's the 9th of April. We're Signal Centre Talking Ball. We've made it to Friday, and I'm joined by Steve O'Hare today. How you doing, Steve?
Yeah, not bad, thanks, mate. Morning.
Good.
All. I think our screen looks a bit nicer, doesn't it, with the nice blue on it? I like
Yeah,
it.
indeed. I've got a chart first up for us today.
Like
It's
it. VIX.
one of the main headlines today is surrounding the VIX, which is the Volatility Index and often referred to as the fear gauge. And interestingly, it closed at its lowest level since February 2020
Wow. We're not
yesterday.
afraid of anything then. We're not
No,
scared.
basically, so there's nothing to worry about, it would seem. Stock markets are trading at record levels, and there's a lot of calm in the markets. It's all sort of pretty good, which is always a bit of a concern because when things start to sort of feel that they are that good, that's when the turning point comes. But
Yeah.
we've said that for a while, hasn't happened yet. There were a few wagers, according to a headline that I saw today, that some options traders have been placing bets that the VIX would rise to around about 40 by July, which is up at that level there. So that would be obviously a fairly significant shift. But just to give you an idea of how this works, this was at the height of the pandemic when all the lockdowns were occurring throughout the world. Prior to that, we were down at these sorts of levels where we are now. And obviously, this just exploded into life, and that's coincided with a crash in financial markets. So since then, we've although seen a couple of spikes higher, the general direction is lower. And while it's going lower, that means that it's pretty good conditions for investing in riskier assets. In terms of the floor on the VIX, I mean, look at this is a pretty significant level down here at sort of 11 or 12. So there's arguably some distance to go before we get down to that kind of level. And
Yeah,
down at
but
that
that
sort of
sort of
level,
like.
then you might see some increased volatility, maybe.
Yeah, I think it seems like a reasonable level to target, doesn't it? Really, it's that
Well, it's the
channel.
lower end of that channel as well.
Yeah, and obviously the horizontal support there, um, you know, and it only takes a few weeks for that to sort of like let that to spike. It
Yeah.
doesn't take long at all. So
Oh, no, risk happens
saying,
all at once.
yeah,
This is what a period of, from these lows
is
here
that
to
a
that is
couple
a
of
period of
months?
28 days. It's a
Yeah,
month.
well, a month. Wow.
It can
So
spike
yeah,
500%.
to say that the VIX may get to 40 by July is not really sort of out of the ordinary. That could easily happen. It could easily happen, as you can see. Moves like that can happen within a few weeks. So
Yeah. So
yeah,
basically, we've just filled the gap here that was
yeah,
created on the 21st of February.
yeah. I sort of think everyone's looking at riskier assets. Obviously, cryptocurrency is a very risky asset. They're talking about that as being the new gold, which I completely disagree with. Gold is actually, you can hold it in your hand. Can't really hold crypto in your hand. It's a virtual currency, so I don't think it's the new gold, but it's an asset which has been taken a lot more seriously now by the world, and it needs to be. It is an
Yeah.
asset of the future.
I
So
mean, it's all good until we see this sort of clear out, which potentially could happen on Bitcoin at some point, and all the retail money and punters maybe suffer a bit of pain on that because that hasn't been the case for a
yeah,
while, has it?
no, it's definitely.
Unfortunately, that's part of trading and investing. That will happen at some point, but not
Yeah,
yet.
I mean, it's very easy for us to sit here and say something is going up or something is going down. But the whole point of it is it's not just as easy as, oh, something's going up, we buy it, we're going to make money. It's
Mm.
not like that. Everything that's got a margin, a risk attached to it. So the idea of what we do is looking for the charts, for looking for them optimum areas where you have more chance of success with that trade that is going up and down. I was thinking about it in the car. I'm thinking about a new name for our channel, Talking Bull, which we have to change because of Red Bull. I've asked Red Bull to change their name, but they won't do it.
Weren't having it, were
So
they?
no. So we've got to sort of think of a new name, and it's just thinking about what we actually do. We look at charts. We look at analysis, not just chart analysis. We look at all different forms of analysis now. We're looking at a lot of new sentiment analysis and things like that in the coming period. And so there's going to be a lot of nice new products that we can sort of share with you and talk about, and they're all sort of tools that help traders. So yeah, there's sort of like I lay awake at night sometimes trying to think of a name for the channel, and then sometimes it's just sitting there in front of you, like never trade alone.
No, that's right. So let's get on with some analysis then. I mean, in terms of headlines, there's not really a lot, and that's why we're seeing the VIX down at the levels that we are. There's nothing that's sort of unsettling the markets at the moment. There's a few sort of bits and pieces in the headlines. Iran's back in the news about nuclear talks. We've got some situation going on with the UK Chancellor. He's in focus because it's emerged he pushed officials to consider helping Green Seal Capital,
Right.
which is obviously a financial services firm. He's been touted as being a future prime minister, so he doesn't really want to get embroiled in any kind of corporate back scratching. We've got some Mario Draghi doing some bits and pieces, but other than that, it's not a lot. And we're seeing equity markets up at new all-time highs. So we'll come on to that shortly. Steve, I'm just going to quickly run straight into the FX side of things because it's not as exciting, I don't think, as what's going on the equities at the moment and the metals. But starting off with the dollar index, so this, we saw a decent move down yesterday on the dollar index. Bit of a bounce back today, up by 0.22%, but we're down to sort of 38.2 or close to it on the dollar index, so maybe there'll be some support form around here. I think as a result of the breakout of this wedge, it all looks reasonably bullish for a dollar index in the very short term, and I think we can target these sorts of levels still. So for me, it's still a case of buying dips on US dollar, which maybe some sort of underlying current with regards to money coming out of riskier assets into safe haven assets. Markets are at all-time highs, so if you are going to take profits, that's when you want to be doing it, and maybe there will be a rotation at some point, but dollar index is certainly something to keep an eye on, I think, for now. If we look at cable, that continues to correct following the break of this channel. That's approaching a 38.2% fib level as well, and the swing lows that we posted on the 25th of March. So we could see some buying emerge here. The volume has dropped off as well, you can see there.
Yeah.
So maybe there'll be some buying support form around here because the selling isn't really that dramatic at this point, so keeping an eye on that. Aussie dollar, still really like this one. I keep talking about this head and shoulders top. Unfortunately got stopped out on the intraday trade that we did for the gun to the head yesterday. That's just the nature of these trades. They are very short term, but the bigger picture here for me is that there's a nice head and shoulders top pattern in place, arguably a bit of a flag forming here. We have engulfed all of yesterday's price action as it stands so far, so that's pretty bearish. And if we get a close below this sort of channel that I've drawn on here, then I think we can start targeting this measured move of the head and shoulders top pattern, which comes down at around about 72.35. So that's my target on that. Aussie yen, quite interesting, potentially a head and shoulders top forming here, not completed yet, and it won't do until it gets around to 82.50. Then we can start talking about that being a head and shoulders top, but I like what's going on there as well, so I'm looking to sell rallies. On the euro dollar side of things, on a bit of an inverse pattern to dollar index, this is correcting higher. At the moment, we are approaching some resistance levels around here. I've sort of sketched out the carcass, I guess, of a head and shoulders top. It's not there yet, but maybe we'll get some resistance around here and we will form a right shoulder. Speculative at this point, but I quite like that as well, and think that that supports my idea of a stronger dollar in the shorter term. What else have we got? So dollar yen, quite interesting. People who have watched will know that we've been talking about the break of this big old trend line, which goes back to 2015. So we saw a nice break higher, and we've seen a very sharp correction in the last few days or so. But look at that, the buyers have come back in on the other side of the broken trend line. So that's really quite nice technically, that we've seen the buyers come back in there, and we're pushing higher today by around about 0.25%. whether or not we can build on here again will be down to whether or not we see any more dollar strength. So I quite like that. I did buy some a dip on that yesterday personally, so looking for higher prices on that in the very short term. What else have we got? We've seen a bit of a rally back in euro sterling after a breakdown to new lows here, but it's come roaring back. Whether or not that's corrective or whether or not it'll end up forming a bottom pattern, it's maybe a bit too early to tell, but maybe we'll see some selling coming around about that kind of level there at 87.35. That was about it on the currency front that was taking my interest. Let's have a look at dollar CAD. That's just one I'm monitoring at the moment. We've seen a break of the wedge. We've not seen any sort of impulsive move to the upside, so I'm a little bit skeptical about that at the moment as to whether or not that's sort of one worth backing. But I think if we can get above this resistance at 26.47, then that might open the way for a corrective move up to this 38.2% level, which is at 132.46. So some potential there. Again, it's all based on what goes on with the dollar index. So keeping tabs on that. Steve, what's going on the equities and metals front?
Well, at last we've done it. FTSE has got back up to the 69.60 level, and it's done it in the last sort of like day or so. And I'll start with the weekly chart just to sort of to show what we were talking about. We were talking about this previous high at the start of the year that we formed at 69.60. We had the sell-off, and we've had this sort of steady move higher since the dollar started to recover, really. And we pushed higher, and we were targeting, first of all, the break above 68.10. We said if it broke above 68.10, there's a good chance it will potentially reach 69.60, and it's done it. So everyone's happy, or are they? I mean, it's retraced quite aggressively over the last few hours, and we can look at that on a short-term time frame. The one thing I wanted to highlight was average range in the FTSE on a weekly basis is around 200 points, and that's pretty much what we have achieved this week. So not sort of like completely unexpected to stall around there. This was one of the trade ideas we looked at earlier. It was looking really to target that move up. Can't remember whether that got stopped out or not. It looks like it got stopped out on there. But on the daily chart, we've actually can see a bit more closely, but also look at today's price action. It doesn't like it, mummy. So maybe we'll get a bit of a reversal in that, or is this the sort of like the opportunity to sort of like ship in some longs just around about the 6,900 level to then have a further attempt higher? I think we'll sort of see it'll be filtered through from a dollar perspective where we go on that. Let's extend this right and see what this channel looks like. So this is the DAX on the daily chart. Again, we've sort of seen a nice push higher and reversal on the 6th, and nothing really in the last couple of days. And we're sort of like limping into the weekend. Obviously, after this nice push higher, a little bit of profit taking has sort of like been the sort of like the story this week, really, from Tuesday onwards on the DAX. Now, again, let's extend that right, and we can see the Dow is hitting some resistance up above on this ending wedge formation. You know, you can see how the move has extended all the way for over 12 months, and the ranges are getting tighter and tighter up here. Again, this is a daily chart. You have the pushes higher, but then it feels like there's no real interest up here, but it's very hard to argue against it. You have to wait for almost really to sort of like to feel anything about getting short on a good risk reward basis. You'd have to wait for a break of 33,335 today for maybe an opportunity to set shorts. Otherwise, you've just got to stick with your that'd be a profit taking level as well. If it breaks below there, maybe sort of like lighten the load if you're long of that. The Nasdaq has shrugged off its sell-off that we've seen, and it's over the last couple of weeks, we've seen it having another parabolic up move, heading towards the all-time highs, 13,906 on this chart. We're not far away. We sort of fell short by about 50, 60 ticks today. Still potential for this afternoon to have another push higher, but I think it'll run into a bit of resistance, so there'll be a bit of profit taking up there. Go with the flow above it, though. What can you do? It just doesn't seem right to be doing this, but maybe this will end up with a similar sort of picture to the FTSE, where it's hit the previous high and then relaxed lower. The commodities, on the commodity side of things, really gold is the interesting one for me. We've obviously got the dollar influence on gold, and dollar has moved higher. But at the same time, so has the gold. So that doesn't really make an awful lot of sense. When the dollar moves higher, normally gold will move lower. When the dollar moves lower, normally gold will move higher. And we've got up to the 1755 level again. This is another level that we said will be tested. We've got a potential double bottom here. If we get a clear break of the 1755 and a decent close below it, especially on a weekly basis, so today, then that potentially opens up a move up towards the 1835 to 1848 and then maybe 1875 level. So definitely one to watch. However, we have seen quite a quick pullback. I mean, it's only sort of like $10 to $12 pullback, so still potential for I think on the intraday basis we're looking at this as a good value area to get to set longs. Stop really has got to be pretty tight, but this current up move really only negates for me on a break of $1,720. So at the moment, if I was long, I'd be sitting there quite content. Stop, maybe I would have brought it up to just below 1720, a break of 1720, and then I think we can revisit and retest the 1677 level. Otherwise, it's the 1755 level which really interests me. Now, if the dollar index fails to sort of like to push higher again, then I think we could see this extending higher. However, if the dollar fights back and gets back above the 93 area, then on the dollar index, then I think we could be dissipating. This move could dissipate and start to trend lower again next week. Again, it's Friday. It's sort of quite an exciting time to sort of like position, but obviously you've got the risk of the weekend. On crude oil, oh, it looks all a bit messy. Let's try and make this look.
Uptick in volume there.
Yes, I tried to hide that because I don't really want it. I mean, obviously for me, oil is one of those things that is heavily manipulated. There's a lot of I was reading some headlines. I think it was from Reuters, Refinitiv. I get sent their newsletters. Pretty decent reading. But one of the main things that was in it today is the fact that Saudi Arabia, especially, in order to wean Saudi Arabia off its dependency on crude, the kingdom needs higher oil prices. Now, with oil, obviously, they can cut the amount of barrels they produce. They can raise the amount of barrels they produce. That it's very and that will obviously flow through to the price as long as you get the majority of the OPEC and the OPEC plus nations agreeing to whatever they decide to do, then you'll get that manipulation. So there's a lot of times when it's obviously bad for the economy if the oil prices are roaring higher, because it sort of everything costs a lot more money, to transport, transporting of goods and everything, and even operating goods. So the multi-trillion-dollar spending push designed to diversify the Saudi Arabian economy will require state companies to cut the dividends they pay government to boost capital spending. Crown Prince Mohammed bin Salman has said it is not clear how much companies like oil group Saudi Aramco, whose 75 billion dividend paid last year, were vital to support state revenues. They would cut their dividends, but any reduction would likely need to be compensated by higher oil prices. So it's in a lot of people's interest, especially very influential places and countries, to have higher oil prices. So that reflects back onto the chart we've seen. We're still in this correction lower that we've seen from the highs on WTI crude oil at 65. Sorry, it was higher than that. It was 67.80 on the 8th of March, and we've seen this corrective wave lower. We're still in this really nice bullish channel from the swing low pandemic, but however, we are in a bit of a flag formation like Joe was. So maybe we could potentially get a break of this level. It would probably hit the bottom of this trend channel and run into congestion around here, around the 52, 54 area. I think we said about a around $57, a break of $57. I expect to move to $54. If we don't get that, then
that would be quite nice technically, though, wouldn't it? Pull back to the lower end of that channel.
Exactly. It would just look great technically, and then that'll be the sort of like, then all of a sudden we'll get the VIX spike and the oil spiking at the same time, and gold spiking and crypto spiking and everything spiking. So we're looking for spiking in July, apparently.
Okay, cool. Right, thanks for that roundup, Steve. That's fantastic. Let's get on with the gun to the head stuff from yesterday, although there isn't much pleasant to talk about there. Let's go. We both went short of riskier assets versus the dollar yesterday. So going long of the dollar. Unfortunately, we were both stopped out. As you can see, 19 ticks and 15 ticks, they were quite tight stop losses. If you look at where they are today, then we were just far too tight with our stops, because they're both working out quite nicely as it goes at the moment. The unfortunate thing about all of this at the minute is that our winners that we are getting are just not big enough. They're not getting the follow through that we need, and that's probably down to calm markets as well, as we've touched upon. I think to operate in this kind of short-term way that we do, we need some more volatility in the markets to be successful, quite frankly. So while there's an absence of that, I think it's just going to be trying to grind it out and trying to find some wins where we can. Steve, is there anything you fancy today, or do you want me to have a go? You can have a look, and I'll go through this one. So this is Aussie yen that I'm looking at. So first up, let's just go to the daily chart. I touched upon this at the outset on my sort of overview of currencies. This is the daily chart. So we've seen a nice bullish channel take shape, and then what I'm seeing here is the potential formation of a head and shoulders top pattern. And we saw the break of the channel. We've seen a retest of the underside of the channel, and we've seen some indecision around here, which for me looks like it could be forming a right shoulder. It won't complete the head and shoulders pattern until we break below 82.32. So at the moment, I think we're in this sort of down leg. So I want to be looking to sell rallies and sell into strength where possible. So looking at it on an intraday basis, I thought this was quite interesting. We seem to have formed a range going back to the 24th of March up to the highs that we saw on the 31st of March, and we've got this sort of midpoint of the range, which is the 50% level, and we seem to have got a band of what was support, which now, based on the break low that we've seen this morning, could act as resistance. So I'm going to sell it now at 83.40. I'm going to put a stop loss 83.83, 42 ticks, and I'm going to target a move to the lower end of this range at 82.29. So just back to that head and shoulders, 82.32 is what I've got as the neckline of this potential head and shoulders pattern. So I'm looking for a move down to that level there, or around about that zone. I think that might be it for today if I'm lucky enough on that. So that's my trade of the day today.
Excellent.
What do you got, Steve?
I suppose really the sort of the one that picking out all of those after yesterday's or today's bearish outside candle forming. Maybe I'll go with oil and then look for a little bit of a sell-off to this trendline support, really short-term. And as we said before, short-term trade ideas are have pretty aggressive stops in them. So let's target a move to 58.65. We're trading at 59.24 currently, and let's have a stop just above 59.54. Again, a very tight stop. 2-to-1 risk reward just on oil. Selling it at 59.24 current price, stopping at 59.54, so a 30 tick stop and a 60 tick target, 2-to-1 risk reward.
Cool. Okay, best of luck. So in terms of news today, we've got Canada employment report at 1:30. We've got a quarterly bulletin from the Bank of England, and we've got the US PPI inflation data due out today as well. Other than that, it's pretty quiet. So we can wrap it up for the week, Steve.
Lovely. Excellent.
Cool.
Have a good weekend all.
Yes, indeed. And we'll be back on Monday morning.
Brilliant.
Have a
Cheers.
good one. Bye.